Yet another retail earnings to start the morning. We love it. We got Home Depot now. You see the stock's down 3% pre-market already. And this is one that falls in the same category. Very tough comparables. But, that's all right. We'll take a look. Maybe they missed on an earnings standpoint. I don't see it, but we'll take a look. If you look at how the stock's performed, it's been pretty fantastic. You can't lie to you. Let's see if it'll load. Up year to date, 26.9% already is pretty good as far as a retail stock is concerned. But on the full year, if you're looking a year out, only up 16%. So again, it's had a nice bump here year to date, really, since lows in January. But if you look on a year standpoint, only up 16% when they grew sales quite a large bit last year. And I think really the housing market's still hotter than ever. So frankly, I think this benefits Home Depot. People are improving their house all the time. I'm working on it right now, from paint to replacing everything that you need to replace. I mean, molding, all of it. We're doing it all. Okay, let's peek at these earnings here. GAAP EPS of $4.53 beats by 11 cents. That's double, more than double what they did a year ago from an EPS standpoint. That's beautiful. I like to see that. I thought it was a lofty goal, and they did it. From a revenue standpoint, up 8.1% year over year is a beat by $380 million. They put up $41.12 billion. That is a very nice quarter. Again, I say tough comparables, and then here they are putting up a great number. We're talking about high single-digit growth out of a company that used to be growing at a lot lower of a rate. Now, here's where we see some issue, though. Comp sales, 4.5% compared to a consensus of 5.61, and U.S. Comp sales at 3.4 compared to 4.94. So here you're going to see, my assumption is massive growth in average ticket prices. My assumption is how you're going to see this fantastic growth number. We'll take a finer peek into it, but I think that's the headline that people are kind of sticking to, and that's why the stock's down. But again, I think that no one tends to look at this perspective when you look at a 2-year standpoint. If you look at Q2 of 2019, they put up $30 billion. This company in 2 years has grown their sales over 30%. That is crazy for a retailer, especially one that's just a home improvement retailer. This company typically is a low single-digit grower, and we're talking about 30% in 2 years. That's significant. That's significant. Double-digit growth on both years. I don't know what more you could really want. Let's look at the press release, though, and see what other finer details we might be able to see. Net earnings came in at $4.8 billion. Boom. They're just printing cash at this point. That's really good for a retailer. $4.3 billion is good. Well, 4.8 compared to 4.3. Sorry. What can I say? Whoopsies. That's good stuff. That's good stuff. $4.8 billion. We love to see growth there. What else? That's the thing about these press releases. They don't have that much. Home Depot's not playing around with the mumbo jumbo, and I kind of really respect it. Net sales perspective, look at that beautiful thing. From a 6 months perspective, 6 months ending, they're up 18.6%. What more can you want? What more can you want? I don't know. Operating income up 32% on a 6 months perspective, up 9.4 here. Expenses up a lot less than that. I love seeing it. Net earnings up 36% when you're looking at a 6 months perspective. This company's doing great numbers here. I mean, what can I say here? EPS up 37%. I don't know. Here's what we got to look at too. So, which I think is kind of crazy because this is one you don't typically see out of retailers lately. Average ticket is up quite a bit, and transactions were down. But last year they saw massive growth in transactions, and average ticket kind of stayed similar. So they saw growth in both last year, but this year we see a little bit of a decrease in transactions. And I think that's an effect of lockdown, right? when people were locked in their house last year, they noticed everything wrong with their house, and they were working on home improvement big time because they had nothing else better to do. They couldn't go out and do anything. So they were working on home improvement projects. So that's why transactions are down, but overall still great on a 2-year standpoint. And if you look 6 months ending, actually, they're up in terms of average ticket over 10% and in transactions over 4. So that is what, in my perspective, is incredible numbers. I mean, I don't know what more I could expect out of them. Let's look at a nice little balance sheet here. We're looking far left and middle. That's full year comparison. That's what I love to see. Total current assets right now sitting at 28.2 compared to 31.3 billion. Big decrease in the cash position. Looks like they increased inventories quite a bit, but I'm going to guess they paid down some debt. Let's be clear here. Total assets in general, though, did see an increase. 70.7 compared to 63.3. They may have just increased this other assets line. I don't know, but I think they probably paid down debt, in my opinion, but maybe I'm wrong. Total current liabilities sitting at 26 point, not going to repeat those numbers, compared to 24.19. So actually an increase here. Looks like mostly coming just from accounts payable and other current liabilities line. Total liabilities in general, they increased. What can I say? 68.7 billion compared to 63.7. Kind of crazy, but overall, you see, from an equity standpoint, this company was in the negative last year, but now sitting at a $2 billion number, which is actually less than they were 6 months ago, so you got to consider that. But the balance sheet's never been too beautiful on this company, I can't lie to you. But for a company with making as much net income as it does, I'm not too concerned about that because they can obviously pay down this long-term debt pretty easily, in my opinion. And that accounts payable line, which they've got really, the total current assets that they could do that. But, I assume they just turn this into a long-term standpoint. Just crazy to me. I expect they'd pay down a little bit more debt. Balance sheet could use some work on Home Depot. I can't lie to you there. Stock's still trading at a cheap price here. After this movement here, we're talking about a PE ratio under 24. Market cap here at 356 billion is relatively higher, as you might be able to parse. I don't think it's that crazy because we're talking about a full year sales here, probably around $180 billion. So it's only really twice that amount. But from a retail standpoint, if you look for the industry average, Home Depot is probably trading on the higher end in terms of a price to sales standpoint. But from a PE ratio, still pretty cheap. That's what I got for you today. I hope you have a good one.